Good morning. This is Mayor Valensky with Driving Markets. Okay, so yesterday the markets continued to be very, very volatile on the back of fears of inflation. Again, the markets were up in the US in the morning and and Europe and the UK, and then came off in the afternoon to close down again. You have to remember, I keep saying over and over again, that the market's trend is going south. It's going down, and therefore any bounce in this present market condition is an opportunity to sell into the market. So be very, very, very careful about trading and be very careful about going long at the moment, because we don't know where the bottom is. What we can see clearly is that the bottom is not being defined, and as long as the fear factor is there, then what you're going to have quite volatile markets continue going forward, and the trend is down. The Nasdaq I'm calling down to well below 10,000 in the short term, simply because I go over this again. The high growth stocks and the speculative stocks have attracted money over the years due to low interest rates or zero interest rates. And now that there's a fear of recession, inflation, and higher interest rates, there is a run for cover from those high growth stocks. I want to take one particular example. Take a company called Upstart. Now, Upstart was established in 2012 as a startup. They're part of the Nasdaq. What do? They do artificial intelligence lending. So artificial intelligence lending is a platform that's used by the banks and the credit unions. Sorry, I just want to make sure you got good cover there. By the banks and the credit unions in order to assess the credibility of a particular client. So what you've got is you've got this platform which assesses the client based on their education, employment, their colleges they've attended, what type of profession they have, and that's used in addition to the regular traditional credit scores of the banks and the credit unions and the lending institutions around the world. And they've done very, very well. They went on some Series A funding back in 2012, 2013, 2015, 2019, and they've raised around about nearly, if I'm correct, around about $80 million, and they're quoted on the Nasdaq. What is the problem? The problem is that they came out with results on Tuesday, and the shares fell after hours by 60%. Why did they fall by 60%? They fell because their forecast on their future business was lower than the analysts expected, and their shares were whacked. And the shares were whacked simply because that all of the Nasdaq shares and the high growth shares are highly overvalued. Their multiples, their PE, their profits earning ratio is simply too high. And therefore, if they come out with any type of disappointing news, then what's likely to happen is those shares are going to be hammered down significantly. And that's what happened. They were just tanked. And yesterday they were down another 16.5%. So therefore, we got a classic example of a tech stock that's done very, very well over the last 8 years, 9 years. It's a startup. All the executives and the directors have come from the Google background and the high-tech background. They've all got very good funding. But the minute that their forecast is negative, then those shares are literally raped. They're tanked and everyone runs for cover. So take Upstart. Upstart is down more than 70% since Tuesday evening. Now that is bringing it into a area whereby if it doesn't start recovering, then its ability to borrow money and cash flow its company is going to be at risk. And that's what's likely to happen going forward. So all these companies that are dependent on cash flow or depending on Series A, B, C, D funding, then they are going to be at high risk. And that's why investors are running for cover, simply because they see they are deemed as too high risk, and the present environment, they're just not working. Okay, right. So what else have we got? You've got, look at the US dollar. As I said, continuously now since January, the US dollar is on a run upwards, and therefore it's going to continue its strengthening against the major currencies, especially against someone like the cable against pound, whereby the pound is under pressure due to Andrew Bailey the head of the Bank of England and the other committee members saying that the UK is likely to go into recession, and that recession is pushing everyone scared of the pound, and the pound is just sinking. So you could see cable, which is pound dollar, down to around about the 115, 116 level in the near term. The other area, which I've said over and over again, is likely to be the other asset which is likely to be under high risk is Bitcoin. Bitcoin is falling and is in free fall, and is likely to go all the way down to $20,000 in the near term, not the long term, in the near term. I'm talking about now the next 2 to 3 weeks. You could see Bitcoin down at a level that you haven't seen for a long time. Also take a look at Facebook. Facebook is probably also going to get down to the 130 level, and Tesla is probably on the way down to the $600 level in the near term also. That's more or less it for today. If you need to contact me on LinkedIn, WhatsApp, YouTube, Instagram, Twitter, all the media platforms. This is Mayor Walensky with Driving Markets. Have a good day.